It is now 10 o'clock, 10:02. Thanks, Lucy. I'll ask everybody to please mute themselves. I would like to start with the introductions. I'd like to thank everybody for attending, who is attending.
I think his game is to split the offshore business.
And I would like to recognize the participation of.
And then maybe he takes one of them.
I'm going to
I think we'll get an announcement. They said by probably December.
Can we please ask Tadubana to mute? Thank you. I'd like to recognize the participation of a very large majority of our directors, and non-executive directors and independent directors are here. I'd like to recognize Giorgio Giachetti, Sitabile Mate, Andrew Bradley, Kate Mapare, Nicola Milner, and Federica Giachetti, that are all present at this meeting. Thank you for taking the time. And to all of you that are participating from all around this region. In fact, we have participants from Cape Town, from Europe. Thank you very much. And our partners from the community of stockbrokers, thank you very much for participating to this meeting. I will start with a brief introduction, just mentioning clearly we are presenting to you the results, unaudited results to the 31st to the June 2023. You will notice that the RDC has grown of one country compared to the last presentation we did, and clearly we have the Zambian flag because of our acquisition of a property in property and an operation in Zambia, the composition of the portfolio will be discussed further afield, but you see that South Africa retains 50% of the portfolio, 22% Croatia, Botswana 26%, and the rest is smaller, 1% in the USA and 1% in Mozambique. During this 6 months, we have had an interesting review of the strategy of the group. Some of you have been already appraised on this, but we've reconfirmed our purpose to grow shareholders' value by owning and managing strategic property assets that enrich stakeholders and communities we serve. You will notice that we have added specifically the shareholders' value and the stakeholders in a wider context. Our vision is to be the leading real estate company in Botswana, and known for its international reach. I think we clearly have a very large component of our portfolio that is international. May I please ask Bina to mute? Known for its expertise, innovation, and sustainability, integrity, and client-centric approach. I think we've added this statement of vision, and you will notice that with the inclusion of innovation and sustainability, which are really very much part of our investment strategy and of our integration of the ESG values within the environment, the sustainability within the strategy. We are transitioning from a very growth-oriented strategy to a value strategy, if you want, where we're planning in the next 5 years to grow our NAV at an inflation plus 3 to 5%, to the satisfaction of some of our shareholders, increase the distribution, hopefully getting to a level which is more in line with the. We are probably in the lower quartile now of the BSE sector, of our sector, and we are looking at slowly getting up to the higher, so more distribution. Looking still to generate our main revenues, not main, but a large part of our revenues in hard currency. So between 30 and 50% of that, and a reduction of the loan to value, as we can see over the last year and a half, we've been addressing that, and we will continue that. We're setting for ourselves a target of not being over the 40%. I will now leave it to our team, and I have the pleasure of having with us many of our team members, starting with Joanne Mabin, our CFO, which will take the limelight here during the presentation. Jacopo Pari and Gary Fisher, our two CEOs, and one working more on the it's a whole team effort, but with different responsibilities. Gary takes care of the portfolio, properties wide over the whole of our regions, while Jacopo is more involved with all the profitability and the operations that generate revenues along to RDC. So I'll leave it to Jacopo to discuss with us a little bit what has actually happened in the last 6 months. Jacopo?
Yeah, good morning. Thank you, Mr. Chairman. Good morning again, everybody, and thank you for coming to this presentation. As you will see further down through Joanne and Gary, it has been a quite challenging but rewarding year. We have been facing headwinds from macroeconomic and geopolitical challenges, but all in all, it seems now that the world is coming to grasp with this new reality, and all indicators are pointing towards a pivot point on this curve. RDC has been no exception in this process, and it has changed to adapt to the new condition. It has refined, as the chairman has just mentioned, its vision, and will maintain and strengthen a well-diversified portfolio across different geographies, currencies, and sectors. Now, with the addition of having the ESG core values as an integral part of our decision-making process. Our primary focus, as per the vision, is safeguarding and augmenting value for all our stakeholders at large. And we are making steady progress, we believe, along our outlined roadmap to that. Through the sales of non-core assets, realizing value from the bargain purchase gain, and targeted debt optimization and restructuring efforts, we have not only improved our key debt metrics, but also fortified and sustainably so our cash flow, thereby freeing up capital for further diversification and investments. In the past period, the combination of interest rate swaps that were in place and natural FX hedges has significantly safeguarded the company from the headwinds of fast-paced rate hikes by the central banks across the jurisdiction we operate within. RDC will continue in its strategy, establishing contractual hedges as soon as an opportunity arises in the interest rate swap curve, and further enhancing, as mentioned, revenue from hard currency, which is part of our natural hedge. During the period, we have witnessed considerable reduction in our vacancy rates and eventually the resurgence of the hospitality market. And this, coupled together with the efforts and the strategy of our team, will pay, in our view, the way for a robust growth trajectory moving forward. And so basically, yeah, this is it for this slide. You will have all the details now. So it's over to you, Gary.
Thank you, Jacopo, and good morning to everybody. I'll deal with the ESG section now, and we have reported extensively to the market in March regarding our ESG activities, which are taking on an increasingly higher profile in the company. The ESG committee has provided direction and guidance to management as we pursue our commitment to the environment, to the communities within which we operate, and to maintaining, of course, the highest standards of governance. We see these three pillars as symbiotic in nature, and hopefully our activities demonstrate our commitment to being an active corporate citizen. We currently focus on the reduction of waste, water and energy usage through our business. We monitor waste segregation and recycling, as well as water consumption. From an energy perspective, we employ usage energy efficiency strategies, and we engage in renewable solutions and, of course, reducing consumptions. We expect shortly to sign our first of several power purchase agreements, which will provide clean power at a reduced cost throughout our portfolio. Just from an S perspective, we believe we're highly sensitized to the communities within which we operate, as diverse as they are, and there will be some examples forthcoming in the next few slides as we move through them. In fact, just jumping into this next slide, you'll see a couple of the activities here, and in the next few slides, we have a long-standing relationship, for instance, with Ngwapa Primary School, supporting their infrastructure development and education outcomes. We visit the staff and the school every year. Our staff visit the school every year and participate in their prize giving. Our support of Safara Hospital has been also long-standing, with the staff participating in various ways over and above the financial support. And we can move to the next slide. Thank you. Yeah, we also identified the Mother Poncho Foundation as providing an excellent and empathetic service in the child welfare sector. We're proud of our association with them. And there's a couple of other examples of what we've continued to do in the Botswana environment. Clicking over to South Africa, cross-border, we've the second year running now been a sponsor of the Investec Art Fair and the award of the RDC Art for Space and Space for Art prize. What isn't seen here is our promotion of local artists through the Radisson Red Hotel as a gallery. It's an inspired idea, and it's given local South African artists invaluable exposure, as well as attracting customers, of course, to the hotel, boosting our bottom line. Cape Town office actively participates in Mandela Day, and the Cape Quarter hosts the Kind Heart Bench, raising awareness for mental health issues. This year, we're bringing Professor Francois Barilli to the Botswana Real Estate Conference in Pakalani next month. The Prof is a widely respected observer of the sector, and he'll be sharing on what he sees as the next trends in the industry, and we do look forward to that, and hopefully some of you will be able to join us in October. This is, I'll just end with a little bit on governance. This is a familiar slide to the market, so I'm not going to spend too much time on it. We reported earlier in the year regarding changes to the board. Ms. Kenewendo and Mr. Mahang formally retired at our AGM in May after a very distinguished tenure. Mr. Mahang stepped down after an enormous contribution over 20 years of service, and was also replaced as lead independent director by Mr. Bradley. And Ms. Kenewendo must be recognized for her valuable role in these transformative years of the company. The company was very pleased to announce the appointment of Ms. Mate to the board, who brings a wealth of experience as a professional within the built sector. And of course, RDC maintains its focus on gender diversity at the highest level, with women currently representing 45% of the board competition. Thank you. I think what I can then do is hand over to Ms. Joanne Mabin to take us through the results.
Okay, thank you. Thank you, Gary. Good morning, ladies and gentlemen. Thanks, Guido. If we can go to the next slide. I am very pleased to present an excellent set of results demonstrating some significant growth compared to the corresponding period. Just looking at some of these key highlights, the investment and property portfolio has grown by 1% to 5.9 billion pula, despite sales during the period. Revenue has increased by 9% to 273 million pula as a result of reduced vacancies in the portfolio, improvement in the hospitality assets, and foreign exchange movements. The net asset value per share has increased by 2% to 4.02 pula per share. Profit from operations is up 12% to 159 million pula due to the growth in revenue exceeding our operating costs and some foreign exchange movements. The distribution per linked unit is up 22% on the corresponding period to 4.26 thebe per share, and the loan to value is reduced from 46% in the corresponding period to 44.9%. So some good financial results for the period. Looking at the summarized statement of comprehensive income, our revenues increased by 9%, net property income has increased by 12%, and the profit from operations has also increased by 12% for the period, showing strong growth compared to the corresponding period. The profit for the period is, however, down 66%, primarily due to the unrealized fair value reductions on interest rate derivative valuations. The key to emphasize here is that these are unrealized movements and don't impact the distribution at all, or the distributable income. The difference between these prior gains and the current year losses is 31.1 million pula, and that's as a result of hedges coming closer to their maturity and the interest rate swap curve improving over the period. These derivatives have, however, protected us from these rising interest rates, saving the group close on 10 million pula in interest for the period under review. Profit for the period was also impacted by the negative fair value adjustments on non-core properties being reclassified as held for sale and the increase in finance costs during the period. Thank you. The statement of financial position has shown some good growth during the period. Compared to the corresponding period, the total asset values increased by 1% to 6.1 million pula. Long-term borrowings are down 1% to 2.7 million pula, resulting in a net asset value increase of 2%. The net cash from operations is up by 12% for the period to 145 million pula. And looking at the covenants, as mentioned, the group loan to value is reduced to 44.9%. It is management's intention to further reduce this to 40% or below that, using the proceeds from our sales to reduce debt. The interest cover ratios decreased marginally to 1.52 times as a result of the increase in the interest rates. This slide includes an overview of the group's interest rate and exchange rate hedging strategies that Jacopo alluded to earlier. At the 30th of June, 56% of the debt was fixed or hedged through interest rate swaps. So we're therefore largely being protected against the rise in interest rates during this period. Our strategy going forward is to build our hedging portfolio and increase the hedge debt by capitalizing on opportunities where there are decreases in the swap curve so as not to lock in these current high interest rates. From an exchange rate hedging perspective, the group has a natural hedge as it has diversified income stream denominated in multiple currencies. A further natural hedge is that RDC invests in and secures debt in the same country, thereby having your property income and your interest expense in the same currency. These two graphs just show that RDC is extremely well diversified in terms of its debt spread by institution and by currency. Then during the period under review, the group successfully concluded a 150 million rand loan with Standard Bank and used the full proceeds to settle a portion of an Investec loan, thereby having no impact on the overall loan to value, but improving some of the other financial metrics. The new loan is on considerably more favorable terms. It comes at a 90 basis point interest rate saving and has much lower amortization payments, which is a very positive impact on the group cash flow, reducing our cash payments by 41 million rand per annum. The group's also been offered a 8.4 million euro loan in Croatia on an unsecured asset. We're actively looking at investment opportunities in Croatia to deploy this cash, where we believe the property market is outperforming. Thank you. I'll hand over to Guido now.
Thanks to my colleagues for their presentations. I think from a structure point of view, I'd like to bring to the attention to all of you that RDC did an application some 9 months ago for an IFSC certification. RDC used to have has a 100% subsidiary called RDCPI that holds all the investments outside of the country. With the change of legislation a few years ago, it is now possible for RDC to hold the certificate directly, and hence simplifying the structure. And therefore, we have made an application, and we are glad to report that from the 1st of January this year, RDCP is IFSC certification came through, and therefore it will allow us to simplify the structure by doing an amalgamation of RDCPI. The shareholders will probably be required to vote on this at an AGM that will come in the next, possibly in the next month or two. But it is clearly that the RDCPI will lose its certificate and its registration with the IFSC, and therefore, because there is no need, the purpose of having RDCPI is no more there. It makes for a simpler and better flow of interest and dividends into RDCPI. This is from a group structure. I will now leave it to Gary to take us through the portfolio.
Thank you, Guido. I think this slide highlights the diverse nature of the portfolio, which was touched on a little earlier in Guido's introduction, both in terms of sector and geographic region. This is, of course, an intentional strategy, and we believe we've improved our risk profile by a natural currency hedge with our offshore holdings and a good balance between retail, office, and the rest of the sectors, being hospitality, residential, and industrial. Our greatest exposure is still Cape Town. We're very comfortable with this. The Cape is well run and is attracting considerable regional and global interest. The company's foundations, however, lie in Botswana soil, and we maintain a significant presence in Botswana. Revenues in Botswana have increased since last reporting, mainly due to the bounce back of tourism and business travel that we're experiencing. And this, of course, enables all surplus hospitality revenue to flow into RDC as rental income, a trend we expect to continue and to increase. Next slide. Right, so here we can see a positive trend when it comes to our vacancy ratios. It's a bit of a busy slide, but what we have included here is we would like to illustrate the regions as a proportion of the revenue generated, because that's important. As I go through it, you'll notice that vacancies have dropped overall to the current 9.9%, which is dropping into single digits for the first time in several years. And I think this just bears testimony to our hands-on approach to property management, and in particular leasing, where our vacancies are now sitting well below national averages. Cape Town vacancies have reduced by more than 50%, with this effect being really enhanced by its greater weighting, as you can see there, up at 35% of the revenues. Gauteng is still exhibiting the highest vacancies, but also on a downward trend due to the hard work of the specialized team in that region. Durban really has a relatively minor weighting, representing only 4% of the portfolio by revenue, but is also much improved from a year ago. And Croatia, of course, continues to benefit from high demand for office and retail. The region's benefiting from its inclusion as a full member of the EU, and that's exhibited not only in its occupancies, but also in the increase in property values there. The slight uptick in Botswana vacancies is transitional as the team works on several current leasing deals. Perhaps of interest to the market is the imminent relocation of the RDC headquarters from a third-party property into RDC-owned Massa Square. This means the asset manager will be making a rental contribution to RDC going forward, and certainly we look forward to welcoming you to our new offices. Thank you. I think I've dealt with that, and I can now hand over back to Jacopo. You're on mute, mate, Jacopo.
Thank you very much. During the period, as you have heard from my colleagues, we have refocused on the strategy of RDC, and after conducting a very thorough analysis encompassing a wide range of KPIs for our properties, both in isolation and together as a part of the overall portfolio, we have identified the properties which were non-core. We have brought them to market, performed the sale, and the ones that you see in this slide are unconditional and will come to a complete execution and transfer within the year. This is a strategy that will allow us to unlock a little bit of the value from the bargain purchase gain and prudently keep on reducing debt in this high interest environment until such day where the trajectory is going to be clear. And clearly we provide resources for capital expenditures to keep our portfolio relevant in the periods, and for further diversification and investment initiatives. Thank you. I think we can move to the next slide. Right, as mentioned, and as you've seen from the flag, we have now completed the transaction, which has proven to be a complicated one, of the acquisition of 50% stake in David Livingstone Safari Lodge in Zambia. We are very happy with our partners that we have identified long back. They are active partners, very well reputed and very well known, and they are knowledgeable in the hospitality industry, and clearly very present and strong on the ground. The next steps for this initiative is going to be to the first board meeting, which is going to happen very soon, to scrutinize the corporate structure, approve the budget for the operation going forward, and focusing on a refurbishment plan, which will help us in realize the growth of what we believe it's a very, very sound acquisition and addition to our portfolio. On the West Lake, there's been hurdles from a regulatory point of view and the permitting side, but we are now just one step away. We have confirmation from our anchor tenants of their support and belief in the node, and we should be basically starting very soon in the next couple of weeks, and the estimated time for completion is going to be within the half year of next year, and this will bring to a new life the center, and we are really looking forward to seeing that happening. On the next point, the sale of Albert Road 108, we have these are kind of preliminary days. We have received a joint venture from our joint venture partner. We have received an offer to purchase our stake. We believe that the offer is solid, and it's now going through, it's not a due diligence, but a financing exercise, which should be concluded clearly within the month of October. That will allow RDC to exit from a node which has become non-core at this point, and by having its capital invested in the development remunerated at a premium to our weighted average cost of capital. So that is all good, and it will allow us a rebalancing of the portfolio. And on the senior living, which has been coming up for a while, we are finalizing the strategy and the corporate structure for this new development. It will bring to Botswana, in our view, a very much needed service which caters for the elderly, their mental health, their physical health, and their social health, adding an offering that is currently not available. And it will be very much a service-focused venture, whereby RDC will play the main role as the landlord, and the operation will make sure that the offering is delivered, so to add to the value of the portfolio at large. There's also a few pointers or hints or nice areas that we are strategically looking into it, and it's our investment, as mentioned by Gary before and Guido, on sustainability in general and in other strategic hospitality assets. And this concludes on acquisition and improvements. And this is a nice slide. I'm shy to present this one. I'm probably not the best person, but these are a few awards that we have collected during the year, and they are all pleasing. They show not only the beauty of our portfolio for the SAPOA and the Architects category winner for our properties, but also from the operation side. Top of it is TripAdvisor for Traveler's Choice, which positions Chobe Marina Lodge, which we have very close at heart in one of the most beautiful parts of Botswana, and being in operation for close to 25 years, in the top 10 hotels worldwide, which is it is seriously an achievement. Chobe Marina keeps on having its Green Tourism Award year on year. Also, the best hotel for Masa has been by Marriott, has been a very rewarding prize award that was given to us, and all of this has culminated in having our chairman receiving the Business Person of the Year award in 2023 for the Italian South African Chamber of Trade and Industry. And the Business Excellence Award is basically testament to the achievement of culminating in these 6 months results. Thank you very much.
Thanks, Jacopo. I think our reach is now well solidified as regional, at least, and we are happy to see that this is happening, and it is thanks to a very diversified team and regionally located. We have team members in Croatia, we have team members in Cape Town, in clearly in Gaborone, because that's our head office, and in Mozambique. And we have a team in Madagascar where we are operating an hotel. So thank you very much for these few words to my colleagues. I will now open the floor to questions or comments. There's always a little bit of reluctance at the beginning, so please don't be shy. We are open to any question. Please raise your hand so I can see. I'll have to scroll through screens, but any questions? Yeah, I see one hand coming on from Mr. Cohen, and then I'll take that, and then a question from Moshada. Please go on, Mr. Cohen.
Right. Good morning, Guido. Congratulations on your recent award in South Africa, and for the excellent results, despite the very demanding international conditions that we've been experiencing over the last year.
Thank you.
My question, first of all, is these results are already 3 months old, so it's nice to get something which is nice and fresh, which I'm glad all of your presenters have done. And I'm just confirming that the senior facility is still earmarked for the Tlokweng plot. Is that true? And what are the plans for upgrading Masa? What upgrade does Masa need at this stage? And what are the financial implications of that? And the last thing is, given that the US government is shutting down on Saturday, will that have any effect on our Manning project? Thank you.
I'll leave Jacopo to answer.
Yeah, I'll take it one by one. Yes, Mr. Cohen, Tlokweng is the earmarked location for the offering. We believe that it's ideal due to being at the same time quiet and very, very close to the city center through the road. So yes, that is it. And we have already plans which were designed pre-COVID, which we are currently revisiting or starting to revisit with our intended operational partner. So I hope this will answer on that Lokwang, which was a very precise question. On Masa, we have secured Masa. I would believe that the hotel side of it is the one which would require the most intervention. It has been operating for more than 10 years, and we have secured finance through ABSA. Very tailored to the needs of hospitality, and we will soon start a property improvement plan which will encompass all the areas and true to our values. So we will have a refresh of the foyer and the conferencing area, probably using the space adjacent to the conferencing area, to the hotel, for additional conferencing space, and that is part of the scheme. We will be refreshing the outlets, so basically the restaurant Don Carlos, Carlitos, and the restaurant by the pool bar. And clearly, as we started in certain instances by changing the flooring, we would be improving the rooms and refreshing the rooms. There will be no need, thanks to a visionary approach to the building, for touching into the life and safety. We have completed the upgrade to with very minimal intervention to the international standards of Marriott. There will be clearly a look into where mechanical and electrical installation can be improved to be more in line with the values that we want to represent through the E of ESG. Okay, I hope Mr. Cohen this will answer. Otherwise, we are available for further details after that. On the Manning has experienced some delays. We are in chat with our initial promoters and with the developers. The reality is that the market itself has not changed. There's still a very good demand on the high-end apartments. They are going through an exercise of confirmation of all the sales, which is proving very positive. We should be knowing more on the details of the outcome within Q1 of this year. Mr. Cohen, I hope it does answer.
Thank you very much.
Thank you. Thank you. Can we take the question of Moshaha?
Thank you. Good morning, and I think also once again, congratulations on the awards as well as your notable financial performance. It's quite thrilling. My question, and I know that I'm taking you back a bit here, and you may have covered this earlier. I noted that your total borrowings as well as your LTV reduced year on year. But I believe your financial costs are up by, I think it's 15 million, if I remember the figure correctly. So if you could just circle back a bit to unpack the increase in the financial costs despite the reduction in your overall borrowings. Thank you.
So I can answer that. It all comes down to the increase in the interest rates. So we do have the hedges in place, which have protected us to an extent, but the increase is as a result of the increase in the interest rates. So the borrowings are down, but marginally. I mean, they're not significantly down, and therefore the increase in the interest rates is quite evident in the interest expense figure.
All right, thank you for that.
Yeah, coming back to that, clearly we in 2021 we did the acquisition. We had to increase our borrowing levels despite our effort, and we reduced the borrowing from 49% to 45% to just shy of 45. The intention is to continue reduce non-strategic assets. Clearly, nobody expected an increase of 500 bips on average on all the debts, whether it's our South African debt or the Botswana debt or the European Union debt. We still have suffered this increase in interest. I think we are seeing possibly the peak of the debt increase, and then hopefully it will reduce slowly, probably not as fast as we would like to see it, but we expect next year to start seeing the effect of all these increases on inflation, and then that should reduce the interest rates, and we should go back to, hopefully by end of next year, when we're talking to you, we should have a more, hopefully a clear picture of what the interest rate trajectory is. As said by Joanne, we saved roughly 10 million in the period of interest because of the hedges. But some of them are coming to a fruition. So like many of our peers on the market, we are seeing that new hedges are quite expensive. Interest rates will continue being quite high next year, hopefully dropping down in 2024, end of 2024. But fortunately, our portfolio is performing well. Our increase of rental revenue and and the valuation too should come through at the end of the year. So when we do a revaluation of portfolio, so all in all, we are very confident that all is in hand. Clearly, we would prefer not to have that increase in interest rate. Any other question? I hope we've answered. I see no more questions. I'll count question one, two. Another question from Mr. Coyne.
Sorry, Guido. I always have my one last question. It's to do with the public perception. I talked to you about this last time. That our net asset value, our NAV, continues to increase. It's over now 4 pula per share, and yet our price on the stock market, our share price stagnates at 225. It's been that way all year. Maybe the stockbrokers and the other investors can help me with this question. Why is the perception that RDCP is not a good investment? I've never seen such a huge difference between NAV and share price as we have. And I just wondered, is it anything to do with the actual dividend yield, or is it just the way the market is operating these days? Thank you.
Well, Mr. Coyne, I think the questions are nobody will answer that question unless someone volunteers to it. I can tell you we're doing a lot of effort to address that. There is very little stocks on sale, and I guess you've answered it. Probably increasing our dividend yield will appease some of the shareholders that are not that are more looking at dividends increase. From the larger shareholders component, we have engaged with a number of the large shareholders, and they support our strategy in the long term. So I hope that this will slowly address that imbalance. You can see from the benchmarking with the other property stocks that the stocks that are trading at close to NAV are those that have really got very little loans and are distributing. But we believe that having gone through a growth pattern, we have much more legs for the future. But that's our strategy.
Thank you, Guido. That ends my question. Thank you so much for this excellent presentation. Bye-bye.
Yeah. Thank you. Seeing that there is no other questions, I'd like to suggest that we close the meeting, and I thank everybody for participating, and look forward to seeing you all in March when we present our year-end results, and I look forward to the engagement that we have with all the major shareholders during the next few weeks, to take more questions. Our team is always ready to engage with all of you. Thank you very much for having been with us today.
Thank you.
Thank you, Guido. Thank you, everybody on the board.
Right. There's a question from Nsoaki. Sorry, let me just pick up again, Nsoaki.
No, it wasn't a question. It was just me clapping my hands.
Thank you very much. Thanks, Nsoaki. Thank you very much. Okay.
We'll
you.
all
Goodbye.
clap our hands.
Thank you very much.
Clapping.
Goodbye. Bye,
Bye,
everybody.
everyone. Bye-bye.
Bye,
Bye,
thank you.
everybody. Thank you for attending.
Bye. Thank you.
Have a happy
Bye, everyone.
Pusa
Thank you.
weekend. Happy
Thank you.
Pusa weekend.
Yes.
Yeah,
You
thank
too.
you. Thank you. Bye.
Ciao.
All is good.
Adios.
Let me switch off.